How does the stock market work? Stock market refers to a group of exchanges that allow securities such as bonds and stocks to be bought and sold. The United States can be described as the stock market or Wall Street. This includes stock exchanges that list shares of public companies and other markets where securities can be traded. How does the stock market work? The stock market helps companies raise money to fund operations by selling shares of stock, and it creates and sustains wealth for individual investors. Stock market investors can purchase ownership stakes from companies to raise capital. These equity stakes are called shares of stock. By listing shares for sale on the stock exchanges that make up the stock market, companies get access to the capital they need to operate and expand their businesses without having to take on debt. Companies are required to provide information to shareholders and allow them to have a say in the management of their business. Exchanging money for stock on the stock exchange is a great way to benefit investors. Investors reap the rewards as stock shares become more valuable over time. This allows companies to grow and expand their businesses. In addition, companies pay dividends to their shareholders as their profits grow. While individual stock performance may vary, the overall stock market has historically provided investors with an average annual return of about 10%. This makes it one of the most reliable ways to grow your money. What is a stock market index? A stock market index measures the performance of stocks in a specific industry or segment of stock market. It is used to track the performance of stocks. One of three large indexes can be used to summarize the performance of the U.S. stock market as a whole. Dow Jones Industrial Average. The DJIT is composed of 30 blue-chip shares of U.S. industry companies. NYSE Composite Index. The NYSE Composite Index tracks price movements for all stocks that are listed on the New York Stock Exchange. S&P 500. The S&P 500,000 companies are represented in the United States. Economy. Stock market versus stock exchange. The stock market and stock exchange are not interchangeable terms. A stock exchange is a component of a larger stock exchange, as many stock exchanges are part of the stock market. People often refer to the performance of the stock market by referring to the thousands upon thousands of publicly traded companies that are listed on multiple stock exchanges. The stock market, more broadly speaking, can be understood to include a wide range of securities, including bonds, mutual funds, and other securities. Other types of markets. The stock market refers to exchanges and markets where equity shares and other securities can be traded. Other financial assets also have their own markets. Over-the-counter markets. OTC is a term that describes securities trading that occurs outside major stock exchanges. OTC trades are made primarily between buyers and sellers. Prices may or may not be public. OTC trading is the norm for most bonds and stocks, including stocks. Penny stocks are also available for trading over the counter. Commodities markets. Commodities markets allow for the trading of raw materials such as steel, oil, and coal. There are approximately 50 major commodity markets that allow trade in a variety of commodities. Derivatives. Financial contracts such as derivatives can be described as derivatives. There are many options of security whose value is linked to an underlying asset. These are basically contractual bets on whether the individual security's value will rise or fall. While derivatives are a great way to hedge your investments for experienced investors, they can also be very risky for novice investors. Foreign exchange markets. Forex trading. It is an international, borderless market for currency exchange. Forex traders profit from the fluctuating currencies of foreign currencies and provide liquidity for international trade. Cryptocurrency, Bitcoin and Ethereum. These cryptocurrencies are decentralized digital assets that are based on blockchain technology. On specialized crypto exchanges, you can trade cryptocurrencies. How to invest in stock market. The process of investing in the stock market is much simpler than you might think. 1. Decide which type of account you would like to open. There are many options from retirement savings to college savings, short-term goals, and long-term goals. Investment account for everything. 2. Open a brokerage account. After you have decided on the type of account you want, it's time to open an account with a provider called brokerage to consider their fees and investment options. Consider the fees of potential investment options when choosing a company. 3. You will need to make an initial deposit in order to get started. To automate your investments, you can set up recurring deposit to automate future transactions. 4. Make wise investments after your account has been opened. You can purchase and sell securities. Individual accounts can be opened. Stocks and bonds or mutual funds. Index funds are exchange-traded funds that include hundreds of individual securities. Experts recommend that you diversify your investments and use fund-based strategies to reduce the chance of losing money from one bad investment. 5. Once you have settled on the type of shares you wish to purchase, you can simply enter the ticker symbol into the buy field. There are some best online money-making offers given in the description below, so don't forget to check them. If you like the video, then like and share it and give your opinion through a comment. If you haven't subscribed to this channel yet, then do it now and also press the bell icon so that you can get notifications of my future videos. Thanks for watching.